Welcome back to the channel. I'm Algabot, and today we're studying a genuinely original expert advisor for MetaTrader 5 called Temporal Asymmetry Trend. This one doesn't lean on a classic indicator like a moving average or a stochastic. Instead, it borrows an idea from physics, the so-called arrow of time, and turns it into a single, dimensionless number that reads the character of recent price movement. By the end of this video, you'll understand the theory behind it, the exact entry and exit rules, the actual code, and a candle-by-candle walkthrough. As always, this is educational content only, not financial advice. Let's start with the big picture. Temporal asymmetry trend is built on a first principles idea from statistical mechanics. A market that is sitting in equilibrium with no persistent buying or selling pressure tends to be time reversible. That's a fancy way of saying that if you played its recent price path backwards, it would look statistically the same as playing it forwards. But when a market is being pushed by a persistent order flow imbalance, it moves out of equilibrium, and its price path becomes time irreversible. Run it backwards, and it no longer looks the same. The strategy measures exactly that irreversibility and uses it as a signal. To do this, the expert advisor looks at close-to-close returns over a window of recent bars, 40 returns by default. From those returns, it builds a small statistic that captures how the acceleration and deceleration phases of the move differ from one another. It then divides that statistic by the volatility scale of the window, which produces a clean, dimensionless number the code calls AT. Because it's dimensionless, the same threshold works whether you're on gold, a currency pair, or an index, and whether you're on the 5-minute or the daily chart. The sign of AT points to a direction. A positive reading reflects a bullish out-of-equilibrium drive, and a negative reading reflects a bearish one. The size of the reading reflects how far from equilibrium the market currently is. The strategy only acts when that reading is large enough to clear a threshold, filtering out the quiet, balanced conditions where the number hovers near zero. Who is this style suited for, in an educational sense? It's aimed at traders who are curious about quantitative, model-driven approaches rather than chart patterns, and who are comfortable letting a formula define the setup. It trades one position at a time per magic number and adapts its risk to volatility automatically. Remember, trading always involves risk, and losses are a normal part of any approach. Let's walk through the mechanics step by step. On each newly completed bar, the expert advisor gathers the last set of close-to-close returns in chronological order, oldest first. With the default window of 40, that's 40 returns built from 41 closes. For each return, it also measures the standard deviation of the window, which is the volatility scale it will use to normalize everything. Next, it forms the core statistic. For every neighboring pair of returns, it multiplies the current return, the previous return, and the difference between them, then averages that across the window. This is the lowest order, time anti-symmetric quantity you can build from the increments. Here's the elegant part. Under time reversal, the two halves of that product swap places, and the whole thing changes sign. So for any perfectly reversible equilibrium series, it averages out to zero. A steady, constant ramp also gives zero, because a straight line looks identical played backwards. What survives is the asymmetry between how the move accelerates and how it decelerates. Accelerating upward or decelerating downward pushes the statistic positive. Accelerating downward or decelerating upward pushes it negative. The expert advisor then divides that statistic by sigma cubed, giving the dimensionless coefficient AT. If the window is completely flat and the volatility scale collapses to zero, the code detects that and simply skips the bar rather than dividing by zero. Now the decision rules. If there is no open position, the strategy signals a long when AT rises above the positive threshold, which defaults to 0.20, and a short when AT falls below the negative threshold. Anything in between is treated as too close to equilibrium to act on. Exits work two ways. The strategy sets a hard stop loss and take profit at entry, both scaled to the current ATR. The stop sits at the entry price minus, or for a short plus, the ATR multiplied by AtrSL multiple, which defaults to 2. The target sits at the ATR multiplied by AtrTp multiple, which defaults to 3. With those defaults, the target distance is 1.5 times the stop distance. On top of that, there's a concept-consistent early exit. On any completed bar, If A hat flips sign against the open trade, meaning the measured drive has reversed, the expert advisor closes the position immediately rather than waiting for the stop or target. It holds just one position per magic number and never stacks trades. Let's read through the MQL5 you see on screen. At the top are the inputs you can adjust in the strategy tester. Window is the number of returns in the asymmetry calculation, 40 by default. Threshold is how large the absolute value of A hat must be before a signal counts as a genuine driven move, set to 0.20. ATR period, AtrSlMult, and AtrTpMult govern the volatility-based stops and targets, and lots and magic handle order size, and the identifier for this strategy's trades. Below the inputs is the heart of the signal. The code computes two booleans. Go long is true when A hat is greater than the threshold, and go short is true when A hat is less than the negative threshold. If neither is true, the function simply returns and waits for the next bar. Now look at the two entry branches. In the buy branch, the strategy reads the ask price, places the stop loss below the entry by AtrSlMult times ATR, places the take profit above the entry by AtrTpMult times ATR, and calls trade.buy with those levels. The sell branch is the mirror image. It reads the bid price, places the stop above the entry, places the take profit below by the ATR multiples, and calls trade.sell. Notice that both sides use the very same ATR distances, so the stop and target automatically widen in fast markets and tighten in calm ones. That's the whole entry engine, one clean symmetric rule for each direction. Let's bring this to life on the chart. Up top you have the price candles, and in the panel below you have the strategy's own indicator, the asymmetry coefficient, which we're calling A hat. Watch how it moves between the two dash threshold lines at positive 0.20 and negative 0.20, with the equilibrium line sitting flat at 0 in the middle. Look at the first three candles. Price is drifting sideways in a tight range, small up and down moves with no real conviction. Down in the panel, the asymmetry coefficient is wandering close to the 0 line, staying inside that neutral band between the two thresholds. This is exactly what an equilibrium market looks like to the strategy. There's no persistent drive, so the coefficient stays small, and the expert advisor does nothing but wait. Now watch the fourth candle. Price puts in a stronger green bar, and crucially the move is accelerating. Each upper turn is bigger than the one before it. That acceleration is precisely what the asymmetry statistic is designed to catch, and the coefficient jumps up and pushes across the positive threshold into the bullish drive zone. That's the trigger. The buy entry marker fires here, because A hat has cleared positive 0.20, signaling a bullish out of equilibrium drive. At the same moment, the expert advisor sets its stop below the entry and its take profit above it, both sized from current ATR, giving that 1.5 to 1 reward to risk shape from the default multipliers. From there the move follows through beautifully. Candles 5, 6, and 7 march higher, and notice the coefficient stays up in the green zone, confirming the drive is still intact. The strategy simply holds. By the 7th candle, price reaches the take profit target and the long trade is closed for a completed move. That's the long side, start to finish. The coefficient identified an accelerating bullish push, the entry marker fired as it crossed the threshold, and the position ran to its target. Now the market changes character. On the 8th candle, price stalls at the highs and prints a sharp reversal bar back down. That deceleration and turn flips the asymmetry statistic hard, and in the panel the coefficient plunges straight through the 0 line and down past the negative threshold into the bearish drive zone. This does two things at once. If any long exposure remained, the sign flip would close it, and because there's now a fresh directed drive to the downside, the sell entry marker fires here. The stop goes above the entry and the take profit below, again scaled to ATR. Follow the last few candles. 9, 10, and 11 step lower in an orderly fashion, and the coefficient holds down in the red zone, telling the strategy the bearish drive is still in control. By the 12th candle, price reaches the downside take profit target and the short trade is closed. So in one clean sequence you've seen the complete logic. When the market is balanced, the coefficient sits near 0 and nothing happens. When an accelerating push develops, the coefficient crosses a threshold, the entry marker fires in that direction, and the trade runs toward an ATR scaled target. With an early exit ready the instant the coefficient flips against the position. This is a model-driven way of reading directional pressure, and it's shown here purely for education. So that's temporal asymmetry trend. We started with the physics idea of time reversal, saw how the expert advisor turns close-to-close returns into a single dimensionless coefficient called A hat, and walked through the exact rules. Long when the coefficient clears the positive threshold, short when it clears the negative one, an early exit when it flips sign, and stops in targets that scale with ATR. We read the actual MQL5 for both the buy and the sell side, and we watched a full long and short sequence unfold on the chart. Please remember this video is educational information only and not financial advice, and trading always carries the risk of loss. If you found it useful, hit like, subscribe, and drop a comment with the strategy you'd like analyzed next. You'll find more breakdowns at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.